Joining me now is Nick Nelson, European equity strategist at UBS. Nick, how much do you actually look at the earnings season? Given that we actually don't know what's going on with Europe, you know, these bond yields are rising, and it's going to make it much more difficult for a lot of the companies, I guess, to sell within their domestic markets.
Sure. Look, I think it's very secondary right now. All eyes are on Europe, all eyes are on the debt crisis, all eyes are on how the politicians respond to that. Having said all that, we buy companies because of their earnings, we buy companies for their cash flow streams, and I actually think this will be a reasonable reporting season to set against what is obviously a difficult macro backdrop.
So Alcoa proved very fruitful.
Yeah, so we just kicked off last night with the US. They have these pre-reporters, the early reporters. There's been about 25 companies ahead of Alcoa. Those have actually been better than expectations. They've beaten by about 4%. So I think in the US, it's going to be a reasonably strong reporting season. We think estimates are probably too low. They have to come up. And in Europe, it probably won't be quite as good, but again, it'll be decent.
So, Nick, again, what exactly are you looking in an earnings report? I mean, how much growth they're getting from outside, or is it just pure ratio, dividends, and that kind of, you know, the basic fundamentals that I guess strategists focused more on 2-3 years ago before this whole mess started in Europe?
Yeah, before this all kicked off, sure. I think what we want to see is top-line growth. So we've seen a big improvement in margins. Margins both in the US and in Europe are close to record levels, but now we need to see the top line driving revenues, and that's what gives you your self-sustaining recovery. The second thing we want to look for is CapEx. We want to see companies having the confidence to invest, and if they have the confidence to invest amidst this difficult macro backdrop, then I think that gives you, again, further growth going forward.
So again, are there sectors that you expect to beat in terms of CapEx, but also beat in terms of earnings? I'm thinking of the oil companies.
Yeah, I think that, the specific hot areas of CapEx would be mining, obviously. The top 5 mining companies are doing $60 billion of CapEx this year alone. Oil companies, so beneficiaries of oil service companies, obviously. Some of the capital goods guys benefit from that. Expenditure on power, infrastructure, those kind of themes. I think that's where there'll be a lot of spending coming from corporates.
And Nick, how much will you be actually watching what they say for their forecast for the future? Because a lot of the companies we saw also in the previous earnings season said, well, we beat this time round, but actually we're not sure how it's going to pan out for the next couple of quarters. Would that be something that you would absolutely stay away from?
Yes, because I think, look, everyone will say that's Q2, that's history, that's in the past. We're now looking forward to the second half of this year and into 2012. And I think if companies can't give decent guidance and sort of convincing guidance, people will be pretty nervous. So the guidance, as ever, will be key.
And Nick, what's your take on banks? Because we're seeing a lot of the European banks definitely taking a hammering today, especially the Italian banks. But we also have the stress test, and I guess they'll prove more, they'll give us a better picture than the actual earnings season, will they not?
Well, they'll give us some idea. I think the problem is, and we had the stress tests obviously last year, slightly different and organised by a different organisation, but I'm not sure they'll give us the answer. I think what we need to see for the banks is obviously some clarity on Greece. We all need to see some clarity on Spain and other parts of Europe. And until we get that, I think the banks remained under pressure. Having said that, there are some banks, Scandinavian banks, UK banks, that we think are well capitalised.
Yeah, UniCredit's down by 28% in the last week. We have the chart there. This doesn't present a buying opportunity, does it?
Well, look, I don't know. I think the Italian banks are reasonably well capitalised. They're all going through to raise their core tier 1s to between 8 and 10%. They're going through, many of them going through rights issues. They have low loan to deposits. They're not incredibly geared like some of the other banks in Europe. But clearly it's all now focused on what happens to Italian bond yields.
Absolutely. Nick, thank you so much. Nick Nelson there.